Oil prices rose on Friday after a US official said an immediate Saudi oil output boost is not expected, with further support from indications that the US central bank could raise interest rates less aggressively than anticipated. Brent crude futures for September delivery rose $1.77 or 1.79% to $100.87 a barrel by 12:06 GMT, while West Texas crude rose $1.32 or 1.38% to $97.10.
I believe that we are a little bit below where we should be right now. There's enough tightness in the market that we should probably be trading around $100 bid at 110, I would imagine. I mean, we do have a serious inflation situation that is arguably causing some demand destruction. So we shouldn't be at like 120 bid at 130 where we were probably. But yeah, so I think that this is a little bit lower. That we've got a really big scare about recession here in the last couple of weeks, and the market has been super hyper sensitive to anything that has to do with the recession situation, as it very well should. But on the other hand, still there's that 1 to 2 million barrels of Russian crude oil that are offline and not coming to market, and it doesn't seem like all that much, but it is at the end of the day, and it makes a big difference.
The US Federal Reserve's most hawkish policymakers on Thursday said they favored a rate increase of 75 basis points at its policy meeting this month, not the bigger increase traders had priced in after a report on Wednesday showed inflation was accelerating. The interest rate uncertainty and weak economic data led to Brent and WTI shedding more than $5 on Thursday, to below the closing price on February 23, the day before Russia invaded Ukraine. Though both contracts clawed back nearly all the losses by the end of the session.
Well, it's a demand destruction situation that the market is following. Anytime you get any kind of headline, it moves in that direction. So CPI on Wednesday in particular was a demand destruction event. Immediately people started talking about 100 basis points at the next Fed meeting. And but since then, and one of the big reasons the market has rallied back here, relatively speaking, from 5-month lows, is that 100 basis point argument kind of got shot down a little bit. The Fed members are saying they're good with 75 basis points, unless the data moving forward from here deteriorates considerably. That's probably what it will be. That's already a demand destruction event, but 100 basis points would have assumed really big destruction that we're not there yet.
US President Joe Biden is in Jeddah to call Saudi Arabia pump more oil. But the United States does not expect Saudi Arabia to immediately boost oil production and is eyeing the outcome of the next OPEC Plus meeting on August 3, a US official said on Friday. The comment comes at a time when spare capacity at members of the Organization of the Petroleum Exporting Countries or OPEC is running low. Still, the US could secure a commitment that OPEC will boost production in the months ahead in hopes that it will provide a signal to the market that supplies are coming if necessary.
There's a lot of talk around crude oil and crude oil this, crude oil that, go to Saudi Arabia. API was criticizing Biden for even going to Saudi Arabia, saying if they could have a conversation with them, then we could talk this through and probably find a way to increase production. Crude. Refineries are the problem. We don't have enough of them. When those 5 refineries were going out of business, this goes back to the Trump administration too, to a certain degree. When those refineries were going out of business, somebody should have stepped in at that point and said, hey, listen, what can we do to save these refineries? Can we offer you low interest loans, some way of keeping this in business? It just shows a shallow thought process that nobody thought this through. And what happens if you have a war in Ukraine, a Russian war in Ukraine? What happens if OPEC doesn't want to put out as many barrels as you think you're going to get? What happens if 2 or 3 refineries go down in a hurricane in the United States? Nobody brought it up. Nobody seemed to care. And these poor refiners, they didn't make money for years. And they were just looking for ways to cut costs or change these into some kind of other facility, a biofuel facility, for example, which is what most of them did. They became biofuel facilities. And that also gave them the green light and the green side of the equation also. You have to invest a certain amount in green energy to be able to do certain things in the fossil fuel industry. So they covered themselves by doing that, but let's look at the monster we've created. We're short of gasoline. It's like Mad Max here. It's starting to get bad, you know, and people are very concerned about how much are they ultimately going to have to pay. Crude oil production in this country is 100,000 barrels less this week than it was last week, and he's showing up in Saudi Arabia asking for more oil. I mean, if I was them, I would say, what about your own country? You're producing 100,000 barrels less than you were last week. And they will have a point, but the U.S. producer is reluctant to crank it up. I mean, they can see, same thing at the end of the day, EV is somewhere out there at the end of in the horizon, 10, 20, 30, 40 years. It's going to chip away every day. You see more Teslas on the street every day, and it's going to continue to chip away at their demand. So we really don't need more crude oil. We need more gasoline. We need more distillate. So I mean, the Saudis they probably have 500,000 barrels of spare capacity. They're at about 10.6 million barrels a day now, pretty close, which is below their OPEC quota, by the way. And they are not even hitting their quota. And we're going to ask them to produce more barrels on top of that. They've never produced above 11 million barrels for more than a couple weeks in their history. And we're basically asking them to go there for good. First of all, you have to ask yourself, is it possible? In my opinion, probably not. Maybe, but probably not. They advertised they're good up to 13 million barrels. But the fact that they're not at quota rate now is concerning.
Analysts expect continued pressure on oil from concerns over the global economy. Brent has dipped noticeably below $100 per barrel this week. It is likely to continue sliding given that the recession fears will presumably not abate for the time being, Commerzbank said in a note. Bearish market sentiment has also followed renewed COVID-19 outbreaks in China, which have hampered a demand recovery. China's refinery throughput in June shrank nearly 10% from a year earlier, with output for the first half of the year down 6%. In the first annual decline for the period since at least 2011, data showed on Friday.